Hi everyone, Anthony Gordon here, Fiduciary Financial. And today I'm going to talk about the most expensive tax that you'll face in retirement. Okay. Now, immediately, I think a lot of you might be thinking, is it personal income tax? Is it some type of clawback? What exactly it is? Well, actually, it's called the dreaded dumb tax. It's not one you hear about often, but I heard about it in a book. It's called The Road Less Stupid, and it's by a gentleman by the name of Keith Cunningham. And I was listening to his audiobook as I ran this morning, as I often do. I often listen to audiobooks, and he talked about the dumb tax, and essentially what he said it was it's just making emotional, irrational decisions based on what your circumstances are at a particular time. And I think that's something that we could all relate to. We're talking about financial or even could be business or personal lives, family, relationships, whatever the case is. When we're emotional, we don't always make the best decisions. No, in his book, what he also said is that when we are emotional, our intellect goes down. So even smart people make dumb decisions because you're driven by emotions. So, in the context of retirement, in the context of financial planning, how does that apply? Well, sometimes it's the small things that we do daily that compound. Sometimes it's just one bad decision that we have that completely, changes our trajectory for a negative, from a positive to a negative. Or sometimes it's things we look back on and said, man, I should have done something then. Or it's sometimes it's the feeling of I didn't know what I didn't know, and so I never made a decision. And so it's important when you're making decisions as it relates to financial planning that you're coming from a place of clarity. What does clarity mean? It means having a clear awareness of what your circumstances are and what the options are, because that awareness creates choice. And in a couple of videos back, I mentioned values. Values is part of the clarity equation. But having true clarity gives you an ability to see, okay, this is where I am, and this is where I want to go, and these are the potential routes that I can take to get there, right? And having, you know, that situation, then what you're going to probably look at, okay, what are my resources for getting there? And one of the worst things you could do is make assumptions that are false or not consider the what if situations. What if the stock market drops? What if I have a health issue? What if I live longer than I planned? What if there's an emergency with the family? And it doesn't necessarily mean you're going to solve everything, but there might be opportunities to put things in place that protect you just in case those situations comes up, or at least have the awareness for it, because if you don't have the awareness, an emotional toll also can be quite expensive and essentially take you out of commission, so you're not even acting or making decisions as you normally would. So, as to go back to the concept of the book of the dreaded dumb tax, as it relates to retirement planning, to relate to financial planning, I think one of the most important things that individuals could do is have a written financial plan, meaning a written financial plan covering all the different separate areas of your life, be it tax planning, cash flow management, risk management, all the different areas, estate planning. And I find that a lot of people spend a ton of time in the investment section, but for example, never really protect that investment. Or they plan a ton of time for the investment aspect of it and completely forget about taxes. And so they'll do well in having a decent portfolio, but they're not in the correct portfolio. So when they get to retirement, then they have to deal with taxes. Or they will structure things, especially in the business, just structure things in a particular way where, okay, they have a ton of money, but never really contemplated how you're going to pull retained earnings from your company and what's the most tax efficient way. I know you're looking at those different strategies. There's a cost associated with that. And that's the thing. If you are not planning, you're going to pay one way or the other. Either you're going to pay today or you're going to pay in the long run. And in most cases, it's much cheaper to pay today. And paying today means either taking the time out if you have the capabilities and the skill set to build that plan, or work with somebody who can help you to build that plan where you have the clarity covering all the different areas from a holistic standpoint, as opposed to winging it or just focusing in one particular area. There's no one solution that's going to get you there. It's not going to be just investment. It's not going to be just insurance. It's not just, just the business. Just looking at it from one particular area is never usually the way to go. There's no silver bullet. There's no one solution, and everyone's different too. That's another thing. A lot of times what you find is that individuals will say, oh, this individual did something and so I should copy that exactly. Well, your situation might be completely different, and you might be the 1% and you might be the outlier, and your plan might need to be a bit different. At least you need to plan for it differently. So what I say is, the most important thing you could do is start by having a written financial plan, not an investment statement, not a copy of your investments, a written plan covering all the different areas, that really gives you clarity, so you have some ability to see where you are, where you're going, what the options are, how to implement, and that plan is organic and should be updated over time, because you might be in one particular you might be in a circumstance right now, and that circumstance changes next year. It changes 3 years from now. But what's important is that you actually have the plan in place and you contemplate those what ifs, and you do as best as possible, to plan for that. Hopefully this was helpful. If it is, then like and subscribe, and I'll talk to you soon. Take care. Bye.